Silver prices have plunged over 30% from recent highs, a dramatic shift impacting global industries and investments. In a sudden and significant turn, silver prices have plunged over 30% from their recent all-time highs. Just days ago, silver was soaring, hitting nearly $122 an ounce on January 29th. But today, February 5th, it sits around $79 an ounce, reflecting a staggering loss of value. This isn't just a minor market tremor, it's a dramatic correction that has sent ripples across global financial markets and the industries that rely on this versatile metal. For everyday people, this kind of volatility can be unsettling, impacting everything from manufacturing costs to investment portfolios. To understand this dramatic drop, we need to look at silver's unique role. Unlike gold, which is primarily a store of value, silver plays a dual role. It's both a precious metal sought after by investors and a crucial industrial commodity used extensively in everything from solar panels and electronics to medical devices and jewelry. In the 12 months leading up to its peak in late January, silver saw an exceptional rally, soaring by 278%. This strong performance was driven by both speculative investment and robust industrial demand, especially from the green energy transition. So what caused such a rapid and severe correction? Analysts point to a perfect storm of factors. First, aggressive speculative selling and profit-taking played a major role. Many believed silver was in aggressively overbought territory, making it vulnerable to a sharp reversal. Second, expectations of tighter U.S. monetary policy from a hawkish Federal Reserve made non-yielding assets like silver less attractive. Third, a strengthening U.S. dollar made dollar-denominated silver more expensive for international buyers, further dampening demand. Lastly, increased margin requirements by exchanges also triggered massive liquidation, accelerating the downward spiral. This sharp decline isn't confined to financial charts. It has real-world consequences. For industries heavily reliant on silver, such as electronics, solar panel manufacturing, and even jewelry, lower prices could eventually mean cheaper raw materials. However, the immediate volatility creates uncertainty for supply chain planning and profitability. For investors, particularly those who jumped in at the peak of the rally, this correction means a significant hit to their portfolio value. While some long-term investors may see this as a buying opportunity, the suddenness of the drop highlights the inherent risks in volatile commodity markets. Looking ahead, the outlook for silver is mixed, with analysts anticipating continued volatility in the near term. Some experts even warn of a potential further drop towards $50 an ounce if current trends persist. However, many believe silver's long-term fundamentals remain strong, particularly due to its critical role in the accelerating green energy transition and other industrial applications. Investors and industries will be closely watching global economic data, further signals from the Federal Reserve regarding interest rates, and the strength of the U.S. dollar for clues on silver's next move. Silver's price is taking a hit, and while this might seem like just a market fluctuation, it can impact the cost of everyday items and the value of investments. It's a reminder that even seemingly stable markets can be unpredictable, and it's wise to understand how these global commodity shifts could eventually touch your own finances. This is GeeseFinance,